This is another podcast from Alpha Business Media. Okay, so let's step into Kathmandu in 2025. Picture a city, really buzzing, right? Lots of new energy. You see construction, cranes. It's visibly transforming.
Absolutely. It's got that feel of rapid growth, attracting attention, attracting capital.
And right at the center of all that energy is this real estate market that well, it seems to defy gravity. Land prices, house prices, they're just skyrocketing.
It's a really striking picture, no doubt. This phenomenal upward trend in property values is hard to miss. But like you said, when you look a bit closer, the picture starts to get, well, complicated.
Complicated is definitely the word,
Mm-hmm.
because alongside these, dizzying price tags, you find things that just don't quite seem to add up.
Mm-hmm.
Like the rental yields investors might expect, they seem surprisingly low compared to what the properties cost. And maybe the biggest disconnect, the one that feels most acute.
The affordability gap.
Exactly. The vast majority of people actually living and working in Kathmandu, they simply can't afford to buy anything close to these market prices. It feels like the market is operating on a totally different planet from most residents' daily lives.
It really is a fascinating paradox. You've got this intense boom, but the fundamentals like local wages, local purchasing power, even the rental returns, they seem completely out of sync with the costs. It really makes you wonder what is driving these values.
And that's exactly what we're going to dive into today. You've provided this fantastic range of sources, articles, research, your own notes, all looking at this specific situation in Kathmandu. Our mission here is to unpack all that, try to connect the dots, and make sense of the forces driving this boom, the paradoxes, the disconnects, and hopefully explain it in pretty straightforward terms.
Great. Let's dig into the sources you've shared.
Okay, so first, let's just paint that picture of the booming market a bit more. Kathmandu's transformation is real. It's growing fast, pulling in people and capital from all over Nepal, becoming a major urban hub.
And that influx naturally puts pressure on land, on housing. It fuels that real estate buzz we talked about.
Yeah, and the sources use pretty strong language to describe the price increases, words like rapid, even almost dizzying.
There are some really concrete examples in the material. One housing project, Karya Binayak Homes, apparently saw prices jump, get this, an average of 12% every year between 2017 and 2024.
12% annually for 7 years.
Yeah.
That's huge, consistent growth.
It really is. And land prices in the prime spots, even more extreme. Areas like Bhutanal-Kantha, land is going for something like 3.2 to 3.8 million Nepalese rupees per annum.
And an anna's tiny, right? Like 30-something square meters.
Exactly, around 32.5 square meters. So we're talking about incredibly high prices per square meter in those desirable locations.
Staggering. And then actual houses in expensive areas. Maharajganj, for instance.
Yeah.
Sources mentioned listings in the crores, that's tens of millions of rupees. We saw numbers like 90 million to 180 million NPR.
For houses on maybe 14 to 18 Anna plots, which aren't enormous estates either, multi-crore prices are very much part of the picture in certain segments.
And what's really telling, as one source pointed out, is that these price rises in the Kathmandu Valley, Lalitpur, Bhaktapur included, kept going up even when prices elsewhere in Nepal were maybe flat or even falling.
Right. That really highlights how concentrated the demand and the price pressure is, specifically within the valley. Table 1 in the source material lays this out quite clearly, showing those price dynamics. It's undeniable the boom is real.
Okay, so if the prices are climbing like this, what's actually pushing them up? What are the engines behind this growth? Your sources seem to point to a mix of things.
Definitely a confluence of factors. One, as you mentioned, is just straightforward urbanization and population growth. More people moving to the city means more demand for places to live.
Makes sense. And this is happening while Nepal's overall economy is developing too, right? There's that forecast of 4 or 5% GDP growth for 2025.
Yes, although that growth isn't always evenly distributed, it does mean some segments of the population have more purchasing power.
Here's where it gets really interesting, and maybe, according to the sources, the biggest single piece of the puzzle: remittances.
Ah, yes. The money sent home by Nepalese working abroad, it's massive. Source 16 suggests it's around a quarter, 25% of the entire country's GDP.
25%. That's an enormous amount of capital flowing in.
And the crucial point from the sources is that a significant chunk of that remittance money gets channeled directly into buying real estate.
Right. Not necessarily into starting businesses or other investments, but land and houses.
Exactly. And this is where one source uses that great analogy of a two-faced Janus. Remittances are vital. They boost the economy, provide essential funds. But when so much goes straight into property, often for investment or maybe speculation,
It pumps up prices without necessarily creating new jobs or productive value in the same way.
precisely. It fuels price inflation based on capital availability, not just local need or economic output. And that ties into another driver, investment demand,
Because real estate is seen as the place to put your money.
pretty much. Source 20 explains that with limited other widely trusted or accessible investment options in Nepal, property has become the default, the preferred asset for saving money and hoping it grows. It's seen as secure, something tangible you can pass down.
Okay. What about infrastructure? Does building new roads and things affect prices?
It does, sure. New infrastructure can definitely increase value in specific areas. But the sources also mention Kathmandu's growth being quite disorderly and uncontrolled.
Meaning the infrastructure doesn't always keep up with where the building is happening.
Right. So instead of spreading value evenly, development often lags, which means demand and prices get even more concentrated in the areas that are already developed or have planned upgrades.
And then there's the S word, speculation. The sources talk about this too.
Yes, Source 21 explicitly mentions the view among some analysts of a potential speculative bubble, meaning prices might be moving away from underlying fundamental value.
Driven by people just hoping to sell higher later.
Partly, yes. And in a market that, according to the sources, lacks really strong, transparent regulation, land brokers and developers can apparently have a lot of influence, potentially pushing prices up further.
Okay, so a mix of real growth, huge remittance flows, investment demand, some infrastructure impact, and a dose of speculation. That paints a picture of why prices might be so high.
Right.
But what about the return? If you're an investor buying at these prices, what are you actually getting back from renting the place out? Let's shift to that other side of the paradox.
Right, the rental market. Because logically, you'd think super high prices would translate into super high rents.
But the sources suggest maybe not so much.
Well, let's look at the numbers provided. A two-bedroom apartment in, say, Imodal, which is in Lalitpur,
Yeah.
might rent for 15,000 to 25,000 NPR a month. A similar, maybe semi-furnished place in a more central area like Baneshwar, perhaps around 40,000 NPR a month.
And there were some broader averages too.
Yeah, Source 26 gave averages like a single room in the city center around 28,000 NPR a month, but outside the center, maybe closer to 15,000. A three-room place might be 50,000 centrally, maybe 28,000 further out.
So how does that translate into a return for an investor? What's the typical rental yield?
Well, the yield is basically your annual rent divided by how much the property cost you. Your sources estimate the average annual residential yield in Kathmandu is, well, relatively modest, somewhere in the range of 4% to 6%.
4 to 6% yield. Okay, but wait. Compare that to the price growth we just talked about, like that 12% annual increase for those homes, or the huge implied growth baked into multi-crore properties.
Exactly. The numbers don't really line up if your main goal as an investor is immediate income from rent. A 4-6% yield doesn't justify paying prices that are appreciating at double-digit rates or prices that are already sky high.
So what's going on there? Why the gap?
It's a classic case of what economists call yield compression. Essentially, investors are paying a premium now based on the expectation that prices will continue to rise significantly in the future. They're banking on capital appreciation, not the current rental income stream.
Ah, okay. So they're willing to accept lower rent today because they believe the asset itself will be worth much more later.
Precisely. And the fundamental reason rents can't keep pace with those soaring property values is, well, it's the tenants.
The people actually paying the rent can only afford so much.
Exactly. The solvency of the vast majority of potential renters puts a ceiling on rental rates. No matter how much an investor paid for a property, they can only charge what the local rental market can actually bear.
That makes total sense. Rent is tied to local wages and affordability in a way that purchase prices, fueled by external capital or investment motives, might not be.
Right. And even if you look at short-term rentals, like Airbnb Source 28 had some data for New Baneshwar. The average daily rate was okay, around $37, but the crucial figure was the median occupancy rate.
How often was it actually rented?
Only about 25.4% of the time, median. So the actual median annual income from that Airbnb, just 4,402 hours. That's roughly 186,000 NTR for the whole year.
Which, again, you compare that annual income to the cost of buying an apartment suitable for Airbnb in Kathmandu.
The yield is still likely quite low. Table 2 in your source material helps visualize this comparison. It seems getting a high return purely from rental income long-term or short-term is pretty challenging given the current property prices.
Okay, this is really crystallizing the core issue. High prices driven by investment in capital, low yields reflecting local rental affordability, which leads us to the most critical and honestly the most concerning disconnect. The gap between those property prices and what average people in Kathmandu can actually afford to pay.
This is really the crux of the social impact. If investors aren't buying primarily for yield and prices are this high, who can actually buy these homes?
Let's look at the numbers on income and affordability from your sources, which Table 3 summarizes. What's the typical economic reality for someone living there?
Well, Nepal's estimated nominal GDP per capita for 2025 is projected around $4,460. If you look at it in terms of purchasing power parity, adjusting for local costs, it's higher, maybe $5,720. But still, compared to developed countries, it's a relatively modest income environment overall.
And there was a figure for average monthly salary.
Source 26 gave a benchmark average net salary of about 31,520 NPR per month. That translates to roughly, what, 237 US dollars a month?
Okay, 237 federal a month average salary. And we know inflation, especially food inflation, has been high recently, according to other sources, eating into that already.
Definitely erodes real purchasing power.
So you've got an average monthly income around 31,000 NPR and property prices in the tens of millions, even hundreds of millions of NPR.
The math just fundamentally doesn't work for homeownership for most people.
It seems impossible.
Source 33 does a stark calculation. Even if you take that higher PTP income figure, around $5,700 a year, and look at buying a relatively modest $100,000 house, which, as we've seen, is quite modest by Kathmandu price standards.
Yeah, barely gets you anything in some areas.
It would take over 17 years of saving every single penny of that income. Nothing for food, rent, transport, nothing, just to buy the house.
So saving for a down payment alone must feel like an insurmountable hurdle for young people, for middle-class families.
Absolutely. And the sources mention this, like informal chats on Reddit cited in Source 33, reflecting this widespread sense of despair, of frustration among people feeling completely locked out of the housing market in their own city. It's a deeply felt social issue.
Could mortgages be a solution? Is borrowing an option for most?
Well, that's another challenge. Mortgage lending doesn't seem to bridge the gap effectively for the majority. The interest rates cited in the sources are quite high.
What kind of rates are we talking?
We saw examples like Nepal SBI offering fixed rates between 10.5% and 12%. NIC Asia quoted around 9.5%. Others use variable rates tied to the bank's base rate plus a margin. Source 26 even cited an average 20-year mortgage rate of around 13.25%.
13%? Wow. And banks don't lend the full amount either, right? You need a big down payment.
Typically, yes. Sources mention banks lending maybe 60% to 70% of the property's value max, so you still need a substantial chunk up front.
Okay. High interest rates, large down payments required.
Yeah.
What does the monthly payment look like even for a smaller loan?
Source 26 gives an example calculation, a 5 million NTR loan, which, again, might only buy you a small plot or a very basic apartment, not a full house in a decent area, if taken at 12% over 20 years. The estimated monthly payment would be around 55,000 NPR.
Wait, 55,000 NPR per month?
Yep.
Just for the mortgage payment. And the average salary we just mentioned was around 31,520 NPR per month.
Exactly.
So the payment on a relatively modest loan is almost double the average monthly take-home pay.
Precisely. It starkly illustrates that conventional mortgages are really only accessible to a very small group of people, high-income earners, who also likely have significant existing savings or family wealth.
So the market isn't being driven by average local buyers taking out mortgages.
Not primarily, no. It seems fundamentally disconnected from the financial reality of most local residents. It's being propelled by other forces, that remittance money coming in, wealthy domestic investors looking for a place to park capital, and, as we discussed, potentially speculative activity.
Okay, so let's try and synthesize this. We have this paradox. Soaring prices, relatively low rental yields that don't seem to justify those prices on their own, and affordability that's basically non-existent for the average person.
Yeah.
Why? What are the deepest roots of this seemingly irrational situation?
Your sources point to a really complex mix of deeply ingrained factors. One of the most fundamental, mentioned in Source 20, is the sheer cultural significance of owning land in Nepal.
It's more than just an asset.
Much more. It's deeply tied to social status. It's seen as the most reliable way to hold wealth, something secure to pass down through generations. So people are often willing to pay a premium that goes beyond just the immediate financial return or housing need. They're paying for that long-term security, that legacy value.
Which drives up demand beyond pure economics. And where does the money to pay these premiums come from? You mentioned remittances, but the sources also hint at other factors.
Yes, the role of the shadow economy, or informal financial flows, seems significant, according to some sources. Source 19 suggests Nepal's economy might rely more on things like remittances and post-disaster reconstruction funds than broad-based productive growth. This kind of environment can create space for informal money.
And real estate becomes a way to manage that money.
It can be used to legalize funds or simply preserve wealth outside the formal banking system sometimes. A key thing enabling this, mentioned in Source 40, is this massive gap between the official government valuation of land used for taxes and its actual market price.
How big a gap are we talking?
The source gives an example. Land officially valued at maybe $1 million. NPR might easily sell for $10 million or more on the open market.
Wow, 10 times or more.
Yeah. This huge discrepancy makes accurate tracking hard, it hinders effective regulation, it weakens the impact of taxes based on official value, and it potentially creates loopholes for things like tax evasion or even money laundering.
Okay, so strong cultural drivers, significant informal capital flows. What about the supply side? Is there just not enough housing being built?
Supply constraints are definitely part of it, combined with major urban planning challenges. The Kathmandu Valley has physical limits, obviously, but Source 2 talks about disorderly and chaotic private development, often happening without adequate infrastructure being put in place first.
So building happens, but maybe not planned well.
Right. Zoning issues, slow official development processes compared to rapid private building, these things restrict the supply of well-serviced, properly planned land and housing.
Does government policy play into this as well? Things like regulations or taxes?
It does, though the effects can be complex and sometimes maybe even counterintuitive. For instance, there are land ceiling regulations limits on how much land one entity can own. While the intent might be good, combined with bureaucracy, these could potentially slow down the formal supply of land coming onto the market. There's been talk about relaxing them, but it's complicated.
And taxes. You mentioned the gap between official and market values.
Exactly. So even though there are capital gains taxes, Source 6 mentions rates like 5% or 7%, their power to curb speculation is limited if they're calculated on that massively undervalued official assessment. Plus, the tax structure might inadvertently encourage holding on to land rather than developing or selling it if transaction taxes are higher than annual property holding taxes.
And the lack of strong regulation we touched on earlier.
That allows brokers and developers to potentially exert more influence on prices in a fragmented market, according to Source 21. And while Nepal restricts foreign ownership of land, which shields it from some global speculative pressures, it also limits potentially beneficial foreign investment in large-scale, well-planned development.
So, pulling it all together, the sources seem to conclude that for a large segment of buyers, especially those using remittances or existing wealth, the main driver isn't, I need a place to live right now. It's more about investment, preserving capital, maybe speculating on future gains.
That seems to be the core finding, this fundamental mismatch between the primary motive of many buyers and the basic need for housing among the wider population. That's really the bedrock of this whole paradox.
And this situation must have real consequences for people, for the city itself. What are the main impacts your sources highlight?
They're significant and mostly negative from a socioeconomic perspective. The most obvious and painful is a deepening housing crisis.
For ordinary families.
Yes. Young professionals, middle-class families. Source 14 is clear. Traditional homeownership is just becoming unattainable for more and more people. This pushes them into precarious situations, maybe informal settlements, which apparently make up a big chunk of the housing stock but often lack basic services, or just resigning themselves to lifelong renting with little security or chance to build equity.
That must impact social mobility, people's outlook on the future.
Hugely. And it directly fuels growing social inequality. Property ownership becomes this massive dividing line. Those who own assets see their wealth balloon, while those who don't fall further behind. Source 45 points to Nepal's existing wealth disparity, the richest 10% holding vastly more than the poorest 40%, and real estate is central to that concentration at the top.
And this inequality can have broader effects.
Definitely. It can increase social tensions, and it contributes to things like brain drain educated young people looking elsewhere because they feel they can't achieve basic life goals like owning a home or find dignity and opportunity in their own country.
Are there risks to the financial system, too? You mentioned a potential bubble.
There are potential risks, yes. Even though the central bank, Nepal Rashtra Bank, has apparently tried to tighten lending policies, Source 40 still mentions that underlying bubble risk. If prices did fall sharply, it could pressure banks through mortgage defaults, even if, as we discussed, mortgages aren't the main driver for the majority right now.
And the city's development itself suffers.
Yes, because speculative demand tends to drive chaotic, unplanned sprawl on the outskirts, often without necessary roads, water, sanitation being built alongside it. This strains existing infrastructure, leads to environmental problems like loss of farmland, as several sources point out. Source 19 even raises the specter of reverse Dutch disease.
What's that again?
It's where large inflows of foreign income like remittances get channeled mainly into unproductive sectors like perhaps speculative real estate, which inflates costs and potentially hinders the growth of other more productive parts of the economy like manufacturing or services.
Okay. And even for people who can invest, the market isn't without its challenges.
No, the high entry cost is obvious, but there are also risks related to legal issues or lack of transparency given the informal elements we discussed.
So, as Source 14 seems to argue, this housing crisis isn't just a housing problem in isolation.
Exactly. It's really a symptom of deeper structural issues. Maybe ineffective policies, concentration of wealth, and this heavy reliance on remittance income flowing into assets that don't necessarily generate broad economic benefit.
So where does Kathmandu go from here? What's the outlook? Is there any path towards a more balanced market?
Well, the forecasts presented in the sources are a bit mixed in the immediate short term. Given that the main drivers, the remittances, the urbanization, the cultural view of land, the supply issues are likely to persist.
Prices probably keep feeling upward pressure.
That seems to be the expectation from sources like Source 3, forecasting continued price growth, but the longer-term view is much more uncertain.
Because this can't go on forever.
It feels unsustainable. Without tackling those fundamental problems, the extreme unaffordability, the disconnect from local incomes, the structural imbalances, the market risks hitting a plateau, stagnation, or, as the sources suggest, potentially a painful correction eventually. Growth driven mainly by external capital and speculation usually doesn't have infinite runway.
So what would it take to bring some balance? What kinds of solutions do the sources point towards?
It would have to be a really comprehensive, multi-pronged approach. The sources outline the categories of things needed. Reforming land policy is key, improving transparency, maybe making supply more flexible, actively stimulating the development of genuinely affordable housing, not just high-end projects.
Making renting a better option, too.
Yes, establishing a more structured, transparent, and maybe secure rental market. Tax reform is another big one, perhaps aligning those official land valuations closer to market reality, maybe adjusting property tax structures.
And the planning issues.
Absolutely critical. Much better proactive urban planning and investing in infrastructure before or alongside development, not years later. Also, creating more attractive and reliable alternative investment options so real estate doesn't feel like the only safe place for people to put savings, and just generally increasing market transparency, maybe through better data systems.
Sounds like a huge undertaking. The paradoxes we've discussed, investment driving prices far beyond local reach, while rents stay tethered to affordability, seem really locked into the system.
They are very real and deeply rooted. The expectation of future price gains seems to be the dominant force for many buyers, overriding low current yields and local affordability constraints.
Which really means, as you were saying, solving this isn't just about tweaking a few real estate regulations.
Exactly. The conclusion that comes through from the source material is that achieving sustainable growth and making housing affordable for the wider population requires tackling much broader economic and social challenges, like fostering more productive job growth, diversifying the economy so it's less dependent on remittances flowing into property, addressing wealth inequality, bringing more of the economy into formal, transparent structures.
And that requires more than just good ideas.
It requires significant political will, because making these kinds of changes would likely challenge powerful interests who, frankly, might be benefiting quite nicely from the current situation, the status quo.
That really puts it into perspective. It highlights just how tangled up the economy, social structures, cultural values, and policy are in shaping something as basic as the housing market in a city like Kathmandu.
It certainly does, and perhaps it leaves us and you listening with this thought. Ultimately, a truly healthy and sustainable property market has to be one that actually works for the needs and within the means of its entire population, not just for a select group banking on future appreciation. Achieving that balance is the real challenge ahead.